This morning, I'm fortunate to have my guest. His name is Dave Rice. Dave is with Key Bookkeepers. Dave is a serial entrepreneur. He started multiple businesses over the years, done very well, and has had the opportunity to sell his businesses. And like I said, his latest venture is Key Bookkeepers. And Dave, welcome to CREPN Radio.
Thank you, Darren. It's a pleasure to be here.
Well, we're glad to have the opportunity to speak with you. Dave, I gave just a very, very brief once over about your background, which is not really fair. If you could do myself and the listeners a favor and just share a little bit more about your background and how you got to this point with Key Bookkeepers.
Sure thing. We've my wife and I have been business partners forever, almost since we got out of college. We built a couple of interesting businesses. My background is pharmacy. My wife's background, Lori, is her background is accounting, and we built a very unique specialty pharmacy, a veterinary specialty pharmacy over the course of about 20 years. I built the business. I had a partner, but we built the business and dealt with veterinarians and pet owners all around the country. Lori has done all the accounting from the very beginning. If you remember back, we actually had a PS2, which was one of the very first IBM PCs, and that's where we did our record keeping on. And we've had good books from the very beginning. We were fortunate enough to sell that company to a larger concern after about 20 years. And part of it was because they could look back at our records, and we had financials from day one. And that just made it very easy. In the meantime, we also built a medical supply company. We sold medical supplies to EMS facilities all over the country. And over the course of about 12 years, we built that company and sold out to a larger concern at that point too. And again, Lori has done the books from the beginning for those businesses. We took a couple of years off when we got out of the last two operations. Cruised the Bahamas for a year and cruised the East Coast. And I had some health issues. We kind of fell away for a little bit, but real estate's always interested us. We did about 4 years ago. We did a really nice little short sale here in Naples and made over six figures on it. And that's when we knew that this was the direction we wanted to go. Once you're self-employed, you're basically unemployable, and that's how we feel about it, and that's the way we've always been. So we've been in the real estate investing business for about 3.5 years. We do fix and flips in the Midwest, even though I live in Naples, Florida. We like the slow, steady work in the Midwest, so we've been sticking there. And again, Lori's been doing the books. And as we spoke to other real estate investors, we realized that we think that there's a need for what Lori's able to do. And a typical client, we had one sign up just 2 weeks ago, and this is a gentleman who has wholesale deals going. He's got some small multifamilies. He's doing a little bit of everything. He's loaning money out of his IRA. He's and his books are a mess. He gave up about a year ago, and he didn't touch his books for over a year. And so now we're in the process of going back and recreating everything for him so that we can go forward. You have to have a place to start with your balance sheet and income statement, so you have a starting point so you can move forward. And so that's what we do, and that's the value that we can provide. We'll do books for most any business, but we like real estate investors because it's our business as well.
Got it. Well, let's dive into this a little bit. I think one of the less sexy topics about real estate or business period is bookkeeping. I mean, I've never met a real outside the box thinker that loves to get deep into the numbers. They're usually more the creative ones that have all the ideas and stuff, and and kind of the dashboard accounting kind of thing. But I guess one of the things, and you and I talked before we got on the call here a little bit, and I wanted to kind of zero in for our listeners as to the benefits of accurate record keeping. And you just mentioned one of your customers right now here, how the multiple different aspects, and I wonder if we could touch on, just start with what's the basics. Why is it important for real estate investors to keep accurate accounting records?
Well, the first real basic importance is that you need to act like a business in order to convince the IRS that you really are in business to make money. And part of that is accurate records. You need to have something to back up those tax returns. So that's really the primary basic start for this. And really the next part is, if you kind of are running everything out of your back pocket or out of your personal account, you're going to miss expenses, you're going to lose receipts, and every expense that you don't account for, you're costing yourself and your business money. So that's really the basic start of this. Nobody's looking to abuse the tax laws, but there's no reason not to take advantage of every deduction that is legally allowable.
Right. No, and I want to just kind of dig in a little bit, because I think one of the things I know is when I was just getting started with investing was just understanding all the different categories of expense. You've got just a straight expense, and then you've got some capital improvements that you have a different amortization schedule. You've got, and just on the simplest form, that each property has its own accounting record. If you've got, a handful of properties, it's not just one big bucket. It's each property has a different record, right?
That's correct. And one of the really great capabilities of a cloud software package like QuickBooks Online is that we have lots and lots of different ways to track categories and classes. And what we typically do is we want to track each property on its own so that you can see exactly how each property is performing. And you'll be very happy when you do that, when you decide to sell, or even more importantly almost, is when you decide to refinance. Because like you said, if you've just got a jumble of numbers and can't break them out by door, you're not going to have the information that you need to provide to the bank. And that's really a great deal of what this comes down to. And it's the ability of somebody that knows accounting and bookkeeping to be able to set these things up so that the average person can look at that and see really what they're looking at and have it make sense.
Right. Now, and I think what you're speaking there too, again, one of the things I've kind of come to recognize is that, just that language, accounting is a language essentially. When you go to speak with a bank, or even like you said, when you go to sell, especially in commercial property, the net operating income, and the only way you get to that number is you take your rents less your expenses, right?
Exactly. And if you haven't accounted for the expenses, now your profit is going to be artificially high, and that can come back to bite you if it's not accurate. If you refinance a property and it turns out that there were expenses that either were forgotten or hidden or just plain missed, that can really change the picture, and that can certainly upset a lender.
Let's talk about this, because and let's talk about just somebody wanting to refinance property. You mentioned this customer you just worked with that had let his records go for a year. What's a kind of a look back if somebody comes to you and they've got a mess on their hands? Do you go back to the beginning? Do you go back to a point in time where it's agreeable to say, okay, let's get from this point forward
It really depends on the client, but typically what we do, for instance, if their taxes have been filed for, let's say, we're talking now in October of 2017, if their taxes have been filed for 2016, then what we're going to do is we're going to take that tax return and we're going to set their accounting up so that at the end of 2016, start of 2017, their books will reflect what their tax return is reflecting. So we aren't gonna worry about all the details behind there because now that's history, that's down the road. Now we're going to look forward. And so typically what we'll do at that point is we will get them back on schedule as of the start of this year. And then we will look at all of their bank statements, all of their credit card statements, all of their bank feeds that are feeding right into the cloud software, and literally go back and build this 1 month at a time and one door at a time, so that they really know what they're doing, and they really know how their properties are performing. And it's always interesting when an owner finds out that, if they've kind of been running everything a little as a slush fund, so to speak, they may not even realize that there could be one property that is dragging them down. Those 80-20 principles fit into almost everything. And there can be one property that can be dragging them down, and they may not even be realizing it if it's kind of getting buried in the numbers. So we will be as precise as the client wishes us to, but we at least want to break out every address of every commercial and residential property that they own, so they really have an accurate picture.
Sure. And I'm just sitting here thinking, with some of the properties I've looked at over the years to purchase, and the records have been kind of sketchy, or the pro forma hasn't really matched or isn't near what they're currently doing, their actuals and all that. And it just occurred to me that if anybody has a property and they're looking to sell, whether it be right away or in the near future, and they're not able to produce some accurate records, I wonder if you could speak to them just a little bit as to, what would you recommend if I've got a property that I want to sell, but I haven't kept the best records, and I'm thinking here sell them next year or two.
Well, in that case, we would want to go back and recreate accurately as much as we can. Let's hope that they've at least kept receipts of what they've done. And it's interesting that you bring this up, Darren, because we now are starting to get inquiries from lenders, commercial lenders, private lenders, where they're either looking at properties for other people to buy or to sell, where they realize that their financials are in such poor condition that they can't loan on the property either to the buyer or the seller. So this is a case where lenders are actually having people like come us in and go back and help put these records together so that they have something that they can take to a lender. So that would be the thing to do. They would want to go back, and even if it's just for that one particular property, of course we'd like to have them get everything up to date, but we can recreate for a particular piece of property if necessary. And one interesting thing about the cloud software that we use, we are able to attach electronically a receipt to every single transaction. So the beauty of it is, once all of that paper that you're piling up, once that goes into the software and is stored as attachments to those transactions, now we have those forever. And it's one of those, that pieces of clutter that you eventually can eliminate. I imagine somebody like you with a lot of commercial properties, you could easily have an office full of accounting records and receipts that we could deal with cloud-based.
No, it's definitely a challenge, and you've got to have some sort of a system. I know we have over time. We started off with one property and kind of baptism by fire there. The first round through the accounting, realized the importance of record keeping, and kind of developed our own little system as basically QuickBooks or Quicken That's what we were using, and just kind of adapted that. But over time, we have outsourced some of our properties to different property managers, and that's just to have it. I mean, I think of the majority of the people that I see really having a need for a service like yours are the self-managing property owners, especially the one we bought here recently was something that the seller had inherited from their parents, and it had been, like you said, kind of more of a slush fund for a number of years. The records were kind of loose, so there was some the records. I mean, we had rent rolls and we had some basic expenses, but it was nothing like what we would have been able to produce for our properties. And I would think that even a property owner that has not kept their records, that comes and works with you or gets their records up to snuff, would really realize, like you said, that 80-20 rule, but just realize, well, whoa, are we missing out? Are we spending too much here? Are we, why are our rents not as much? We're not making enough to pay for the property. I mean, it really becomes crystal clear as to where you're missing an opportunity, and and how you can improve the value of your property. Again, if you're looking to sell your property and you want to maximize the return on your property, there's only one way you're going to be able to do that, is to be able to know exactly where how the property's performing, and be able to present that in an accurate way to where the seller or the buyer can easily recognize your rents, your expenses, and you back that out through a cap rate. You're going to be able to determine and command what the market price is for your property. So I would think that's a huge aha for anybody that's not doing that.
Absolutely. Even if your goal is to maximize the cash out as the value of your property increases, the better your financial records are, the more you're able to cash out, if you're of a mindset to cash out as much equity as possible.
Right.
All those opportunities are there with good record keeping. It's interesting, the real estate investor crowd. I hear this all the time. The real estate coaches. It's really easy to fill a room with people who want to make $50,000 flipping a piece of property. But if you try and fill a room where your presentation is, let's show you how to keep accurate financial records, that's just not the sexy presentation that everybody's interested in. Well,
we're going to title this episode "Sexy Bookkeeping" just for you, okay? So just to kind of wrap up here a little bit, if I'm hearing you right, and this is kind of who could benefit most from using your service or service like yours, and I think the place where we started was a property owner. Anybody's got a property and wants to be able to accurately present their property, whether it be to a bank or to be able to present it to whether a seller or a broker. I would think then the second opportunity would be with brokers that are looking to present a property and really want to help their customer get the maximum value for their
Correct.
property. And then you mentioned lenders, and I hadn't thought about lenders, but that makes complete sense. And I would think, whether it be a commercial lender or a private lender, to understand really what they're lending against, as opposed to the back of a napkin loan kind of thing, or kind of a finger in the wind, kind of hope that it matches up kind of thing.
Right, and all those are facets of what we're trying to accomplish here.
So I think one thing that's important to note, and you've mentioned kind of the cloud-based software you use, is there any territory limitations for you as far as working with clients?
None whatsoever. We operate completely virtually. We operate in the cloud, and so we can work with anybody, really most anywhere in the country. We want our goal is to make it as easy as possible. Every time you, as a real estate investor, generate an expense, we can set it up so that all of those expenses and feeds and emails can come directly to us as well as to you. We can make it so that if you're out to dinner with a client, you can literally take a picture of the receipt with your telephone and have it sent to a specific email or to a Dropbox account that we monitor, and we will take all of that information and put it aside, store it, save it, and protect it, and it's now in your finances for eternity.
Hey, one question, and I don't mean to put you on the spot here, but I'm guessing that anybody that's considering this would be, want to know at some point. Can you give any kind of a sense of what somebody should expect this to cost? I assume there's clearly a different scenario if you're talking about somebody bringing a shoebox of years worth of receipts, and that that would be kind of a cleanup mode. But from just an ongoing mode, is there any kind of a range of fees that you can share, or is that kind of different per each scenario? Or?
It really does vary per scenario, but I'm happy to address it. As you mentioned, the cleanup is really really specific to each individual person or entity. So we look at those completely separately and price them. And frankly, we usually discount those because it's the way that what we need to do to get somebody up to a position where they can now go forward. So we probably should charge a lot more for those things because it's a tremendous amount of work to go back and recreate. But it's the way that we get somebody in shape going forward. And then going forward, we essentially look at, you mentioned commercial investors look at how many doors they own. We look at it more as transactions. And so what we would do is we would want to go and look and some sort of a read-only access review of what they're currently doing. Our base rates are around $300 a month, but that includes the QuickBooks Online monthly fees, which run $50 a month for a client. We get a little break on that, but we pass that along. So we're looking at around $300 to $325 a month to start to do for monthly bookkeeping, and that's to provide monthly statements, quarterly tax estimates, and year-end statements. And then what we do is we're a month-to-month agreement. We are not a long-term contract. We certainly would like people to stay at least 6 months so they can see just the kind of value we can provide, but we don't hold anybody to a long-term contract. And then every 6 months, we're going to go back and we're going to review that, and we're going to see just what the workload is. And if their business is growing, we're going to grow with them, but we're going to make sure that we're going to continue to be a value to them all the way through. The other way that we kind of look at this is, I've said this to many investors, is if your business in real estate investing is going out and finding deals, finding money, putting those deals together, if the time that you're taking doing your bookkeeping yourself, if all that time costs you one deal in a year, then hopefully our fees will be less than that one deal. So if we can, in other words, we're looking at us as another outsourcing potential, just like you outsource social media marketing and all the other things that a real estate investor outsources. If the time you're spending on bookkeeping is potentially costing you a deal, you may have never looked at it that way, but that's an easy way to look at it. We like to think that we can provide at least double the value just in finding a deal in our monthly services.
Got it. Dave, what's the one thing you'd recommend our listeners do in order to have success when owning and managing real estate and a real estate investment property?
I would say stop trying to do everything yourself. And bookkeeping is part of that, but I'm talking about it in general. I have found just in my 3.5 years in real estate investing, the more I ask for help, the more I get other opinions, the more I bring people in and tell me what I'm doing wrong, what I'm doing right, the more I open my mind to more opinions, the more success I have, and I think the more success everyone will have.
I like it. And before we wrap this up, what's the best way for our listeners to find out more about you or get in touch with you?
We have a website at keybookkeepers.com. You can take a look at that. Our Facebook page is at Key Bookkeepers.
Okay.
Our email address we have is keybookkeepers@gmail.com.
All right. And I'll have all that in the show notes for our listeners. Dave, I really appreciate you taking the time to talk today. Is there anything that we didn't cover that you would have liked us to go over?
I think we've pretty much covered it. We just believe that this is one of the unsung parts of real estate investing and really small business ownership that we believe people should be aware of, and either do it yourself right or find somebody that can do it for you.
Sounds good. Dave, I want to thank you again for taking the time to talk today, and I look forward to doing it again soon.
Thanks, Darren.
All right. And for our listeners, if you like the show, share the show with someone you know. It's really easy to do. You can share Dave's information and the benefits of keeping accurate records for your real estate investment. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.